Welcome to Bitcoin Escape Plan. We've just seen a few key signals on Bitcoin that are telling us clearly which direction the price wants to move now. In this video, we're going to go over what those signals are and why they are important in the short term, despite this overall, in my belief, being a relief rally and not significant indication of higher highs like you're probably hearing other channels tell you about. That's okay. We're going to go over all of that in this video. We always start off with the 4-hour time frame, and later on in the video I will go over the best trade setups that you could have taken during this most recent range. And then if you're very new to the channel, you should check out bitcoinescapeplan.com. Every Monday I release a newsletter that goes over the key levels that I think are going to be the most important that you can read in your own time in your email or on the website instead of having to listen to me ramble for however long I decide to ramble today. We'll see. So it's always an interesting part of the experience for all of us. All right, 4-hour chart. Let's go into Bitcoin. So these are the two signals that I'm talking about that are the most important. This is the downtrend anchored VWAP bottom band. This is the elder VWAP, the oldest VWAP, middle band. The bottom band of the top one is currently sitting at about 70.4K. The middle band itself is sitting at about 65.8K. So this top one here, that one is trending down from the October all-time high of 126.2K. So that's telling us how the price is behaving relative to that high. This middle band is drawn from the 2011 lows. So that's telling us how the price is behaving over many cycles. I love drawing it from that just because of how accurate it is with the price. Like the price reacts to it very frequently, and I never have to touch it. It's awesome. I love the anchored VWAP tool. It's the best. It's in volume-based forecasting. Check it out. Anyways, so those are the two things that are happening right now is when we see a strong reaction to the middle band of the older anchored VWAP, what that means is that we're going to start seeing it trend towards the upper band. Now the upper band is way far out of reach. I believe it's not even that guy. I think it's this guy, which is 95.3K. Yes, it is that one. The price is not going to get that high. So what does that mean to me? That means that the price has respected the middle band and is going to trend towards the upper band, but is ultimately going to fail it. Now, what is telling me that? What's giving me the indication of that? Because we also have this downtrend anchor VWAP that again is going from the October highs, where we just saw an interaction with it for the first time since I believe January. Yeah, like late January is when we actually broke down to it and then fully gave it up. So this is our first interaction with it since then, is this first week of March, and then now the retest here. And we don't have enough evidence to show if we're going to have strength here or if we're going to continue to fail down lower. And as you can see, this range is getting tighter and tighter over time, which is really going to cause the overall volatility of Bitcoin is about to be much less predictable, I think, in the very short term, like within the next, say, 3 to 4 weeks. I would say it's much more difficult to predict than it has been leading up to now, because it really could react either way. I'm still of the opinion, and like I said, I'll go over the higher time frames a little bit later on in the video. I'm still in the opinion that we see it favor the upside initially, and then it will still capitulate and start dropping down later. That's just how it works. That's also what the volume is telling us. We're really thin. We're super thin from about 71.4K to 81.6K, which means as we climb those levels, anybody who bought way above there is going to think, oh, all right, sick. This is my opportunity to get out of this thing that I haven't been making any money on, which that's really what you have to keep in mind is the psychology of the other individuals holding the asset, not just you. So that's what we're looking for at the moment is this tightening of these two very key and opposite indications, because the middle band heading towards the upper band combined with if we see a significant failure of this bottom band trending back towards its middle band, which I believe its middle band is here, which is 85.7K. which, as I've talked about in other videos, and I'll go over briefly in a bit, that I believe is probably the highest that we're going to see, and I think that we see a failure there. I don't think we see strength there, and a failure there would then push us back down towards the middle band of the anchored VWAP once again, of the elder VWAP, and at that time we would fail it. So I think that's going to take place over the course of multiple weeks, but in the short term, it's getting very close. You know, we're talking about not more than 5K worth of price movement is what's going to change that. And I don't mean $5,000 worth of volume, but $5,000 worth of price is really what's sitting between, do we see that rise higher, or does that rise higher get invalidated because we have another strong interaction to the downside with that middle band? Technically, we could stay at the middle band for a very long time, but I think it's more likely when we see a significant attempt back towards the upper band and a failure there, that it is instead going to swing lower from the middle and then test towards the low rather than towards the high, which the low on this elder VWAP at the moment on the 4-hour time frame is about 36.5K, which is in alignment with what I think the low could be this year, is between 34 and 39K. So that's the short term. I am going to return to the 4-hour later for the trade setups because they're pretty obvious in here, but again, stick with me a little bit longer. We're going to go over the higher time frames before we dive into the trades. Like and subscribe. Let me know if you're enjoying me adding the trading content to it, because it's really helpful for me to have a place to review it publicly as well, so that I understand it better. So on the monthly, pretty clear at the moment that we have a downtrend, 5 months in a row of red candles. All we have to do now is close above 66.98K. And then technically this month would be regarded as bullish. Really, I think it's going to be regarded as consolidation more than anything. But basically the broader trend that we're looking for, which I do think can be expressed a little bit better on the weekly, but it bears looking at the monthly as well. These are the same Fibonacci pivots on both time frames. This is 64K. 64K is just below the 50% retracement mark. 50% of 126.2 is roughly, let's call it 63.1K, but 63K. So this Fibonacci pivot sitting slightly above that just kind of establishes this as a key range that we need to either see support or resistance form. At the moment, it is support. We are going to retest it, and I would imagine at that time it's going to be broken and formed as resistance. But we'll only know that based on this interaction to the 76.2K pivot, which we haven't had since early February when we lost it. And again, we'll see that in the weekly time frame a little bit more clearly than we see it here. But pretty much that's what we're waiting for the month of March, is we want to see a close. Ideally, we want to see a break above that before the end of the month. Or technically, we could just see it steadily rise into the end of the month and then close above it at the end of the month. But that's going to be the most bullish signal for us, is if we can get a close above that 76.2K pivot. And then the 80K pivot is no longer being regarded as an active Fibonacci pivot by the chart. However, I think that is the more important one. I think that we can break 76.2K, and you can see with this candle here, the high is 79.3K, which is partially just because that's where this one, well, I guess no, it's a little bit higher than this one closed. But it failed at that 80K pivot at that time. So I really think that the 80K pivot is going to be the one that's closer to where the price runs to. I do not think that we see the monthly SMA again. The monthly SMA is currently sitting at about 90.1K. I do not think we see it again. I've said this before in other videos. I will say it again. I believe that this 97.9K in January is the highest that Bitcoin is going to be all of 2026. I'm so sorry. I just think that's reality. So that's the broader trend of what we're looking at, is how high can we go here before another failure? I don't think that we see a retest of that SMA, which means anything below 89.9K essentially, 90-ish K, anything below that is just going to be regarded as a failure attempting to retest the monthly, and the price is going to react violently towards that, period. Now let's study what I'm talking about there. So this is the weekly SMA, and I believe that it shows this trend more clearly. So the weekly SMA has been dropping down past this 96K pivot for a long time. What that means is by the time the price actually interacts with this weekly SMA, even just where it is, let alone, remember, we're still not there yet, which means it's going to keep dropping down towards wherever the price is until it meets back up with the price. So whenever price does actually get through this, it faces more and more resistance at this 96K Fibonacci pivot, the lower that this SMA pulls the price, essentially. Whereas if we interacted with it up here, which that's what happened in the 2022 cycle, in the 2022 cycle, we saw functionally, this is 47.6K. Functionally, let's call that 48K. 48K is exactly 50% of that 96K pivot that we saw failed in January. Now, very similar, although this took a longer period of time, we had an initial failure at that Fibonacci pivot, a retest attempt and failure, another retest and failure, a break back to it on the other side of the SMA flip, meaning here, in this instance, there's not that much resistance that was organically formed there because the price broke through the SMA and did not have to run that far to get past it. So really, these candles here, struggling to close very high above that without giving it back, that actually was forming resistance, even with the price being so close to it. And I guess the only caveat to what I'm saying now would be if we see a break of the SMA hold strong and then close a little bit higher and then close a little bit higher, slowly this actually becomes more possible for us to get support there as opposed to violent rejection. I mean, that is really what it looks like, I believe, when you see a violent rejection. So we already saw that. I'm inclined to think that the lower that this SMA goes, by the time we interact with it, it makes it harder for 96 to even be on the table, let alone, again, where the monthly SMA is closer to here, 89 and change, 90K, which means we shouldn't even expect price to get that high. And this range in here, of November and December, when we were trying to hold on to those levels, functionally, that's going to be resistance that forms well below where we already are struggling to get to in the 90K range. If we look at the volume again, the volume is heaviest between 86 and 96. And I guarantee you, if the price is going to run towards that level, which it's telling us on multiple time frames, this is the weekly as well for the downtrend anchor VWAP, is about 85.6, 85.7K, which is very close to that same exact indication on the 4 hour for where that downtrend anchor VWAP is telling us the price wants to head to. I just think it's going to fail it at that time. And I know there's a lot of conflicting signals on the chart. I don't really pay that much attention to crossovers and things like that. I'm not paying attention to those interactions with the trend lines. I'm just specifically paying attention to, I believe that the price is going to head towards this 76.2K pivot and react to it favorably. Obviously, if it fails there, then all of this analysis is pointless and it's not going to touch that middle band, and it's just going to break down through 65.7K and continue dropping off a cliff. And there is no other weekly SMA retest. But for most other cycles, we get that weekly SMA retest, and we kind of got it here, but we didn't get a proper interaction and failure with it. And that's classically what we want to see at this stage of a bear market. Is this was a good attempt, but it was still below it. We want to see people actually regain enough faith where it is painful for them when it has to be taken away. I know that sounds terrible, but that is the market cycle. That is what the process has to go through to fully filter out the majority of the weak hands, and then to get to the bottom and then to restart again. That's how these types of like price dynamics, supply and demand markets function. You know, there has to be significant emotional exchange, or it can't be sustained. So that's, I believe, the most important signal that we have in the next couple months. Like, call it like 8 weeks, 10 weeks. I believe this will be resolved by probably the middle of April, possibly the end of April. So once we get, already the SMA is below the 50% mark of, that would be 86K. So it would be, yeah, it's already below it. Already below the 50% mark of this range. And basically the broader trend of where we've been stuck lately here is wanting to get above the 50% mark of the range that we're currently in, which I believe we are sitting at the moment. We're slightly above it at the moment. Not by a lot. It's like 70.2K roughly. That is the midpoint of the range. So once we can get above that, that should be enough momentum for us to head towards that 76.2K pivot. And then the 76.2K pivot again is going to be, I think, the clearest evidence of price direction moving into 80K. 80K may not be significant resistance on the way up unless the SMA has already been pulled down that low. If the SMA is already down that low, then that price is going to be rejected hard at that point. It's starting to curve a little bit inward, not quite enough to shift trend. Trend is definitely downward still, like favoring downside momentum overwhelmingly. But that's what I think is going to be the most likely interaction, is that we see one more attempt above 80 to 86K. At the moment, I mean, say that it takes 2-3 more weeks for the price to actually interact with that. We're talking about the SMA is probably going to be at that 80K mark, maybe 82 at the highest. But that puts a lot of pressure on the rest of this range to be favorable after a retest of the weekly SMA, whereas most often when we have that retest of the SMA, it's brief. It's not very long. So this is April, end of March of 2022. We're above the SMA for 3 weeks total before it initially fails, and it fails on that Fibonacci pivot, which again, it's close to that Fibonacci pivot. That would be the equivalent of us retesting it here and having to go all the way up there and not fail it. It's not even likely that it's going to get all the way up there. It's going to do something similar to this probably and fail it. If we look at the older one in 2018, it's pretty similar. It was more violent in this initial drop. Oh, this is the other factor. The price was a little bit more stable back then, which sounds ridiculous to say because it was so much smaller in comparison. But the price was healthily above the monthly SMA for most of 2019. It really didn't drop down until the end, pretty much. So by all accounts, the price still looked pretty healthy, I guess, through most of the bear market. I'm going on the wrong part. This is what I'm looking for, sorry. It's still way later that we have that interaction. We break down at a similar time, but we're still above it. We're still above it in February. Again, you got to remember the context. We've been below it now since like November. This is our retest and failure in April. And then we don't have an actual break above it until July, which I do think that there's a lot of similarities. I mean, that's Donald Trump was president during that one. So I do think there's a lot of possibilities of either April or July being when we have an interaction with the weekly SMA. I just think in both instances, it's probably a failure and not strength there. And like by the time July comes around, it's just going to be lower. Like that's all that matters, is the weekly SMA is either going to round out. It's not going to flip back to the upside. I don't think, or if it is, it's going to be temporary. I don't know if we have any evidence of that. I mean, this is not until 23 that it flips to the upside. This is not until 2019 that it flips to the upside. It just takes a lot longer on both the monthly and the weekly timeframes for that trend to actually shift once it has started breaking down And I think the closest that we're going to get to maybe a consolidation is here, is once we get to the mid 60s, high 50s. And the price is already touched down to there. So we need several weeks for that weekly SMA to get down there as well, which means price is going to be much lower than it. And I think that gets prompted by a failure, like I said, around 86. So price fails at around 86 between April and July. I'm favoring, I guess, July at this point. You know, if we actually want people to like fully invest in the possibility that this run is going to come back, then we need significant volume to enter. Again, between about 86.6K and 71.3K, or whatever, call it slightly lower, 70.6K. There's nothing there. There's nothing there. So there's nothing preventing the people from above that cost basis from seeing price get there and saying, you know what, I'd rather take a 5% haircut than a 25% haircut. I'm going to get out of this asset that I don't know anything about, you know. That's going to be the psychology of the bulk of the people up here, which is not going to be helpful necessarily for the price. It's just going to shift the bulk of the volume from these prices to these prices, which means we could form support there as a base to go higher, depending on how many of these people also sell out at that time, if that's an acceptable enough haircut for them where they get out. Which I think it really depends on, you know, the level of interest of the investor. If it's just people with IBIT, then they're probably not thinking about it that hard. They're probably just considering, okay, I'm back to when I entered. That's good enough for me. I'm going to take it out and buy gold or oil or whatever. Like, they don't have an emotional relationship to the Bitcoin so far as like the quality of their future. It's just a dollar amount to them. Sorry, I'm getting philosophical now instead of just paying attention to the charts. But broadly, I believe that is what's occurring, is that we're going to see a shift from the bulk of the weight of people who like did not have informed opinions, and that's why, you know, they're going to be tested now. Do they have the conviction to hold through that and to dollar cost average and to buy more at these levels? Or are they going to behave fearfully and dump and then lower the average price even lower, which then again allows for the price to dip well below that point as opposed to well above that point? We want all of these people to not exit those positions and to fill up here, you know, which we'll see that. If this starts to like fill out where there's less and less volume, like up here used to be super important. You know, 117.6. I used to talk about 117.6 all the time. It's not relevant anymore. So many of the people who bought at that level are gone. So that's what we need to see. And this is the anchored volume profile tool, also free. I believe also in forecasting. Oh, what did I do? Yes, volume based in forecasting. I didn't mean to do that. Okay. Let's jump into the trades. But broadly, that's what I think is happening. Hopefully all that made sense. So the trades on the 4 hour. So as I said in the other video, I was a little bit early in this one. Really, I'm noticing that it's like you're way better off just actually waiting for the 4 hour break instead of trying to trade shorter term trends, unless you are willing to literally be in a trade for like 30 minutes to an hour and a half, in which case there are plenty of scalps. But if you're actually trying to time these longer term swings, it's just way more clear and obvious on the 4 hour chart. So that's where I shorted initially, and I was early, and then I was busy. I did not want to enter on these ones. This one technically would have played out. That's not a crazy, I hate when it does this. It's gonna do the sticky keys thing. 2%, not too bad, but that would have been over the course of like 2 days, so not the greatest trade. I wanted to wait through the reaction there, And then honestly, I was at the mechanic, so I was not paying attention at that time. So what that would have told you though, this is a clear entry. We both had a failure of the 71.8K pivot, which is super important because again, we're trying to get back to 73.8K. We're showing strength above 69, which is good. I'm not going to pretend like I understand trend lines, but we are back on that trend line, which is a strong signal. That is helpful for us, again, off of both the middle band of the Elder VWAP. We're showing a strong reaction. We showed a strong reaction to the 4-hour SMA as well as we just saw, this would have been your entry or your exit position because we saw a strong reaction to both that downtrend and the SMA. So if you were someone who entered the position, really any of these two would have been fine between 1 and 5 p.m. Really 1 and 9 actually. I guess you could have entered this for maybe not all of this candle, but at least probably the beginning of this candle. That candle opened at 71.3. That certainly would have been acceptable to short from there. And then you're looking at more like a 3% trade, so 30% on the 10x leverage contracts. And again, just a much cleaner entry on the 4-hour than on the other time frames, but you would have had to sit through this. So me personally, why I made the decision to stay out of this one after initially taking the trade and then being wrong, because again, you could have taken, I hate you, sticky keys. Okay, let's go. You could have taken this one for like a 1.6% gain, which is good, but it's not as clean as this one up here. So I'm still trying to develop my rule set for when do I take these trades, when do I wait? Because this one, very quickly, you would have been, you would have had to take profits at probably less than 1% or around 1%, and then been out or willing to wait multiple days. This one, I think, is approaching more. This is at the 1 o'clock hour again. It's like starting to approach more realistic. One, because we have a reaction to that downtrend anchor VWAP from the price, as well as we actually see where the strength ends. This is very similar to how I was thinking of this other trade. I had been talking about 73.8K forever. So we went to 74 and started to show weakness right around that same pivot at 73.6K. That told me very clearly, okay, this is going to be a strong one, and I'm very happy with that trade. I ended up getting, it's only a 2.3% swing that I was able to capture, but the full move would have been 4% or 40% on your money, which is very good. So kind of a similar circumstance here, but it's actually more similar to the other trade I took over at the beginning of March, where we see a break above the Bollinger Band, and ironically, a reaction to that same trend line. So that same trend line, except now we're reacting favorably to that. So what does that tell us? That tells us, again, the price direction at the moment, the momentum is favoring to the upside. Now, it may be very short-lived, if we aren't able to keep these key levels. But essentially, it would have been the same thing here, where you would have taken a quick trade. Like it would have been 12 hours maybe? Come on, work with me, sticky keys. A day and 4 hours. So a little bit more than a day in order to capture that full movement, but pretty good trade regardless. A little bit cleaner again once you've seen the full extension of the run, which also could have been seen on the daily. We also had a reaction, that would have been acceptable. I don't see a long entry there, like that's not a clean enough long entry. And that's really the issue with these types of runs is like, I could see an exit here, like I can see a short here and an exit here. That makes sense to me. What does not make sense to me is I have to just gamble basically that that's going to go up now, which in fairness, again, strong reaction to that trend line. So that may be enough of an indication for an entry of a reversal trade, but that's fundamentally a different type of trade than this one is. This one is a very clear signal based off the Bollinger Band, and I don't give a shit if it's the top one or the bottom one. I don't care. It's a very clear indication of an entry. I know exactly, within reason, how the price is going to behave, other than instances like this where we're seeing compression. I prefer to trade expansion. This is expansion. It's big and wide here, big and wide here. I understand how that behaves. It's going to have to go towards the opposite side, even if it gets stopped by the SMA. But with compression, I don't know what the fuck is going to happen. I don't know if it's going to shoot right through that and go to here. I don't know if it's going to keep going higher. So normally for me, I tend to wait a little bit and let those ride out, just because I've also seen the same happen for a couple weeks ago. Like, where exactly would the long have been here? Wrong, 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 you know? Like, that would have been awful. And you just had to wait until it got to a key level, which in this particular instance, it was the middle band of the anchor VWAP was what told us, okay, we've found a point of gravity. You know, we've stopped spinning finally. We're like spinning like we just got thrown out of an airlock. And now we've just touched something that's slowing us down a little bit. And now we've slowed down and we can start rotating back to where we need to go. Like it sometimes it will be expressed by a bunch of candles in a row. And all you can either do is ride the overall trend of the higher time frame, which is sometimes appropriate, you know, like sometimes it is appropriate to say, okay, we failed on this daily pivot. It's going to go lower, I think, after, again, multiple weeks of attempting to see it. But I think for a lot of these, you're really in a position where you're just trying to take a trade rather than actually seeing a clear indication. Like this one is more clear. We see a wick down to and a failure of the Fibonacci pivot outside of the Bollinger Band. And then even just for a quick rise, come on, I hate you when it don't work. That's 12%. 12% over 2-3 days. It's 120% on your money if you're using a 10x leverage. So the daily is nice as well. I don't think it's as clear as the 4 hour, and I would much rather take two 12% trades that I'm in for 4 hours a piece than have to wait 3 days in a trade that goes up more. Just me personally, I think it's a little bit less stressful than having to sit and think about that position for that whole time. Other than, I guess, if you're just very well capitalized. But at the moment, all you could have done is taken the reversal trade there. I don't think we have a clear trade now. We need to see if price can continue to close above this downtrend anchor VWAP. And then it's pretty much the same thing. If we see another reaction here and it breaks the Bollinger Band instead of the Bollinger Band continuing to extend, which at the moment it is, you know, so there's a possibility that, you know, that the only entry for this was way back here, you know, at the end of February. That was the actual last long opportunity. And we're just looking for shorts and to see where the Omega short will be from, which I think is going to be 86K. I think the further we get towards that's going to make a lot of sense at that time, probably, to keep some shorts running or relative safety, I think. It'll depend on how the price reacts to that again, because everything I said could be completely thrown out the window if we show really strong intention at 86K and just continue above it. I just find it very hard to believe that that's what's going to happen. I just don't see it for all of the news-related things that I don't like to talk about in videos, because I don't think they're as important as the price. So we're starting to form some support below here, which is good, gives us room for that temporary rise. But at the moment, there is no clear trade setup on the 4 hour. You can try and ride these swings on the 1 hour. I wouldn't do that personally. I don't think that that's a good indication of a short. Like the lowest it looks like we're gonna go on the 4 hour, if we can continue to close above it, is like 70.4, which I guess is about the same as the hourly, but I would still anticipate the same thing on the hourly, where we see it trend above that. So yeah, you're talking about a 0.2% trade down to that. So not a good entry for a short at the moment, I don't think. And even these, some of these would have been acceptable quickly. I don't really like I mean, that's still great, 2% over a couple hours. I don't really like the 1 hour as much for entries. I think it's a little bit less obvious than the 4 hour, but obviously it does still exist. There's still plenty of scalps in there. If you can catch you can catch the correct side of the tightening of the bands, the compression of the bands. Those are pretty explosive, obviously. I really need to study that more. I definitely understand the expansion periods more. I don't really understand the compression, but in that regard, this Wednesday, the 11th, would have been the best in terms of a long entry at the moment, and we could expect theoretically that it will continue to expand upwards if we see a strong reaction to that downtrend anchor VWAP. I don't really think taking an entry off the downtrend anchor VWAP is a good idea. Like if you look at it, like say you took a short there, you had to get out of that very quickly at like 1 or 1.5%, and then you're in loss again. Technically, you'd still be in profit, but not by a lot, maybe by less than 2%, and do take a long there, because then same thing, you got like a couple hours where you're slightly above it, and then you're back below. So not the cleanest entry. The SMA is a slightly cleaner entry, but you don't know if it's going to react to it favorably or if it's going to break down to the other side. There's not enough evidence of that. The Bollinger Band doesn't work that way. It doesn't randomly one day decide, oh, okay, well, I'm just going to keep going down below the bottom band. Like, even if it breaks the bottom band consecutively, it will still have to get back inside of it. Like it can't stay outside of it forever. Whereas we don't know what's going to happen when the price interacts with the SMA. It could go above it, it could go below it, it could do whatever the hell it wants to. So those are our cleaner entries, is the Bollinger Band breaks. I prefer the 4-hour ones, they're a little bit cleaner. But for instance, this one, you would have missed it if you just waited for that. And I do think in this case, the middle band of the anchor VWAP is a little bit more of an indication of an entry. You'd have to be careful with the leverage position here. I guess you wouldn't be stopped out at a 4% decline, but obviously you'd be in some significant pain experiencing that. And then we did have a cleaner entry there of a 4-hour break anyways. So that's just the reality, is sometimes it'll break and give us a clear signal, and sometimes it does not. At the moment, we do not have a clear signal. The more likely one is going to be another short scalp, I would think, than another significant downtrend one. I think the significant downtrend one probably doesn't come until we see a further extension of this. There's a possibility, of course, as the bottom band continues to get pulled up, that maybe we have another interaction with it around that 70.6K, especially if we think about it on the monthly time frame. If we're going to have a close somewhere in here, like 71, 72, which there's still plenty of time in March, so we could close significantly higher than that. But assuming that we close somewhere in there, it's not unreasonable that wherever we wick down to in April could start around there, or that it could end there, depending on how April reacts to that 76.2K pivot, same as March. That's pretty much it for today. I will update you on any trades on Friday's video. I don't think I'm going to enter any on the longer time frames. If I do, it would just be me hunting for 15-minute flips, which are way less reliable, considerably less reliable, like a lot of chop. Sometimes there's great setups, but not frequently enough. I think you'd have to be paying attention to the price all day, catching little 1% guppies, which is fine if you're trading with enough of a position size, but not for everybody. So I'm going to stick to the 4-hour chart. All right, I'll talk to you in Friday's video. Adios. Thanks for watching.